Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 26, 2025, and we're diving into GES's fiscal year 2026 third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss GES's latest financial performance.
GES has reported some interesting numbers this quarter. Let's break them down for our viewers. Revenue and profitability overview. Let's start with the top line. GES reported a net revenue of $791 million for the third quarter, marking a 7% increase in US dollars and a 5% increase in constant currency. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by strong performances in the Americas Wholesale and Europe segments. The Americas Wholesale saw a remarkable 28% increase in US dollars, while Europe revenues grew by 10%. These gains offset the declines in the Asia and licensing segments.
And how about profitability? The company reported a GAAP EPS of 48 cents and an adjusted EPS of 35 cents. How does this compare to expectations?
GES exceeded the analyst forecast of 22 cents, delivering an adjusted EPS of 35 cents. This beat is attributed to effective cost management and a favorable currency impact, which added 9 cents to the adjusted EPS.
Operational efficiencies and future outlook. Moving on to operational efficiencies, GES reported a GAAP operating margin of 2.9% and an adjusted operating margin of 4.7%. What does this tell us about their operational performance?
The decrease in operating margin from the previous year is mainly due to higher expenses, including costs related to the proposed take-private transaction with Authentic Brands Group. Despite these costs, the company managed to maintain a positive net earnings of $25.6 million, showcasing resilience in their operations.
Speaking of the take-private transaction, can you elaborate on this strategic move?
Absolutely. GES has entered into an agreement with Authentic Brands Group, where Authentic will acquire 51% of the company's intellectual property. This move is expected to close in the fourth quarter and will result in GES no longer being publicly listed. It's a significant shift in their strategic direction.
And with this transaction pending, GES has suspended its financial guidance. How should investors interpret this?
Without guidance, investors will need to focus on the company's current performance metrics and strategic initiatives. The take-private transaction could potentially unlock new value, but it also introduces uncertainty until finalized.
Segment performance and strategic initiatives. Let's delve into the segment performance. Europe and Americas Wholesale showed strong growth, while Asia faced challenges. What are the implications here?
Europe's 10% growth is encouraging, driven by higher initial markups and increased retail comparable sales. The Americas Wholesale's 28% growth highlights robust demand in that segment. However, Asia's 8% decline reflects ongoing challenges, including lower product margins and competitive pressures.
GES also completed the acquisition of Rag & Bone. How is this integration progressing?
The integration of Rag & Bone is part of GES's strategy to diversify and strengthen its brand portfolio. This acquisition is expected to enhance their market presence and offer synergies in operations and distribution.
Key takeaways. In summary, GES has delivered a solid performance this quarter, with strong revenue growth and an EPS that beat expectations. The proposed take-private transaction with Authentic Brands Group marks a pivotal moment for the company. John, any final thoughts on GES's investment prospects?
GES is navigating a transformative phase with the take-private transaction. While there are uncertainties, the company's strong segment performances and strategic acquisitions like Rag & Bone position it well for future growth. Investors should keep an eye on the transaction's completion and its impact on the company's operations.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on GES performance in the comments below.